Lending remains pretty tight for small businesses, and that makes paying the bills tough for a lot of them. But one company thinks it has the solution, creating an online auction for accounts receivable so that those small businesses can get the money they need up front. Nick Perkin is the founder of Receivables Exchange. Thanks for joining us.
Thanks for having me.
Interesting business. Just break down for us how this works, because you say you're growing exponentially right now.
Well, it's actually a fairly straightforward business model. What we are is a marketplace where small and mid-sized businesses can go and access capital. So think of it like an eBay-type marketplace where you're a small and medium business and you need access to capital. So what you do is you register, you apply, and then once approved, you can put your receivables, your invoices on the market, on the exchange, and institutions, financial institutions, bid on them real time to buy them.
And they're giving you the money you need when you need it.
Quickly, flexibly, in a very sort of quick fashion.
But right now, you say business is great, but what a risky marketplace right now. You just got a big capital infusion from Bain, $17 million, a nod of approval there, but this is such a risky marketplace for this kind of business. Why now?
Well, yeah, it's actually not as risky as you would think because people are looking to get the lowest possible cost of funds that they can on our market. So what they're looking to do is take their best receivables, their best invoices, and put them on our market and have people bid on them real time. And because it's competitive, it drives down the cost.
Why are the people bidding on these accounts receivable? What's the upside for them in this market?
Well, these are hedge funds and other financial institutions, pools of capital, banks, etc. And what they're looking for is a return. So they can go on there and they can look at different types of invoices. For large companies, about 80% of our invoices that sell on the market are either S&P 500, investment grade, or large companies. And so they look at those invoices and say, hey, this is a great asset for me to buy. So they buy it, and it's very short term. So they like the short term aspect of it, they like the return aspect of it. So it's a very interesting asset class for them to purchase.
What about the small businesses you're dealing with right now? You have a unique view of how those small businesses are doing. You're seeing exactly how they're doing through what they're putting up for auction.
Yeah.
How are small businesses doing right now in terms of getting the funds that they need?
Well, what we're definitely seeing is that the customers that the small businesses are working with are pushing out the payment dates on their invoices. So they're getting further and further stretched out. So it used to be around 45 days. Now it's closer to 60 days when their customers are paying them. So it's putting all kinds of strain on the cash flow of these small and medium companies. And so what these companies are doing is they can come onto our exchange, they can put their invoices up for sale and get funds within 24, 48 hours from the time of that trade. So it's much faster.
What about the ratings for the receivables? That's important when you're a bidder and you're taking a risk on this. Are they rated like bonds or equities?
It's not rated, but what happens is...
Any kind of judgment here?
Well, there is. First of all, there's a lot of... the buyers can see information about the particular invoice that they're acquiring. So think of it like Yahoo's finance area, where you can see key information about the asset that you're purchasing. In that case, stocks. In our case, is invoices. But also what's very important is that as you trade, so you're a small company and you're putting your invoices for sale and people are buying them. The more you trade, the more you can decrease the price of your cost of funds because it de-risks the transaction. In other words, think of it like your credit card. When you were in college, the line that you had and the rate that you paid was probably a higher rate and a lower line that you got from your credit card. But as you used your credit card more and more, the line went up and the rate came down. Same thing applies here. As the more you trade, the more your invoices are purchased by entities, the lower your cost comes down because you de-risk the transaction.
And you're making the money on each transaction.
And we're on a commission on each trade.
So the more transactions, better for you guys.
More transactions, also the better for us, better for everybody, really.
Finally, scaling the exchange. Plans to apply this elsewhere?
Well, obviously our market segment is huge. It's 4 million business-to-business companies across the United States. Right now, we're in 47 different industries across 45 different states. So a huge market, a lot of penetration to do, and that's a big part of why we raise these funds is to penetrate that marketplace. That said, there's a lot of interest from around the world for us to expand this marketplace.
Where do you see the opportunity globally?
Well, I think it's globally. I mean, I think that it's pretty much anywhere where there's commerce. This is an effective mechanism to get capital at an efficient price. So I think it works everywhere. But obviously, we got a lot of work to do right here in the U.S.
Of course. Thanks so much, Nick.
Thank you.
Appreciate it.